afternoon and welcome to Bitcoin Bull Run Anatomy. I have a surprise guest, a special guest that I really admire. I call him Dr. Bull Run. He will be joining us in 5-10 minutes or so. But first and foremost, I am doing this stream especially for the about 2,900 people copying me on eToro that have money at stake. A lot of people are, if not nervous, then unsure about the bull run. I am super bullish, and I want to explain why. I want to explain what I expect and why I consider it, if not certain, then very, very likely that anyone holding Bitcoin now or copying me for that sake on eToro will be laughing late this year and next year. And so what I do on eToro is I trade the Bitcoin halving cycle. I'm not selling Bitcoin to build a house or buy a car. I'm selling Bitcoin to buy more Bitcoin. And I know some people may not agree to that, but I think I'm pulling this one off. Anyways, so let me jump into real quick. I want to get all this done, all the intro before my guest comes on. Let's share screen and just real quickly see what I want to start sharing is, let me see if I got it right. That is the, boom, boom, boom. That is my profile on eToro when I just, wait. Here we go. So on eToro, I post most of my opinions and analysis on Bitcoin in lots of aspects. Price, bull run. I love the bull run, and Bitcoin in general as money and why it's necessary for the world population to have sound money and all the benefits of that. But just real quick, I have currently 2,965 copiers. That means they have allocated some amount of dollars in US to copy my trade on the halving cycle. And anything I do happens to them in real time. Now, obviously, let me take this one out a little bit. Obviously, that means that the beginning of the year was amazingly positive. Then the last 4 months, if we include this one, 3.5 months, have been negative, and that's how it is. This is a bull run that is, in my opinion, a bit similar to 2013, where it's really divided up in what I expect to be two legs. Where we have a monster leg up, which we already had. Then we have a big correction, what I call a breather in the bull run. We're going through an accumulation phase, reaccumulation, where people that didn't educate themselves, that are nervous about Bitcoin, they panic sell. And this is where the smart money or the whales, they step in and reaccumulate higher or bigger amounts of Bitcoin. If we should just go through, well, let me just real quick have a look at, so if you look at eToro has this, I mean, they're global, but in US it's kind of contained because of regulations. Currently, Crypto Kevin has the most copiers in US. I am number 2 currently with 225%. Return over the last 12 months, he's got 228. And really what has happened is that I was doing great. I mean, I still consider me doing great, obviously, but everything was going perfect when Bitcoin was in the first leg of the bull run. And now when Bitcoin is taking a breather, some of that speculative money has gone to altcoins. I think the reason that people call altcoins shitcoins is because altcoins suggest they have an alternative use case, which me and many others believe is not the case. Regardless, that is your personal opinion. I just try to warn people against scams that delay the adoption of global sound money, which will be much better for humanity. That being said, let me just quickly, I have my guest now in the waiting room and can't wait to let him in. I just want to real quick also just share this with you that I started a here we go. I started a Bitcoin meetup back in 2017 and have been educating people about Bitcoin ever since. And I'm now kind of like kickstarting that back in because there's a lot of money, a lot of people on eToro that have money at stake that would like to, come out and say hi and meet me and hear about what I'm doing. And I can't wait to meet, as many of my copiers as possible. So I'm kicking that off tomorrow in Brentwood, which is not far from where I live, at a place called AOC. It's on meetup.com. I think I forgot to put the link down below, but I may add that later. But at least on eToro, I have a link down below to my page on eToro where I post analysis. And on there, I have a link to this event. Anyways, you can find it on meetup.com as well. Really looking forward. There's going to be 3-4 people coming out. We're going to have a drink and just be social and have a good time. That being said, I haven't paid attention to the chat at all here because I'm still, just introducing surprise guests coming up. Thank you so much for joining. I'm very excited to be able to introduce the guy that I call Dr. Bull Run. Will Clement III. Welcome, sir, and thank you for joining the show that you definitely should be part of, because this is Bull Run Anatomy Part 1. Welcome to the show, and thanks for joining.
Hey man, my bad. I didn't realize I was muted. What's going on? Good to be back recording with you. We did the Toxic Happy Hour. That had to be 2 months ago now at this point, right?
Yeah, and I would like to say I promised you we did monthly, but I was lucky to get your commitment to do monthly. But ever since Miami, either Poppy's been busy or I've been busy. So I guess we haven't be able to coordinate it. And we would be doing a Toxic Happy Hour right now with Poppy if he was available. Right now he's on he's not MIA, but he's on holiday simping boat drink somewhere. So yeah, unfortunately he's not here. So I decided to do this episode on Bitcoin Bull Run.
And do you do these every week or what?
No, well, I mean, I started doing it almost weekly back in until April, May. Then I traveled for a month. I came back. Then there was the Bitcoin 2021 in Miami. I came back, and then you get out of your habits, and So I want to restart this again. I want to do. You probably don't know about it, but on eToro, which is a trading platform, which is global. US is kind of like its own, because of regulations, sort of an isolated entity. But there on eToro, I educate people on Bitcoin, both in terms of why we need to have sound money, why that's going to be good for humanity, but also I trade the halving cycle. So also have a focus on price. I know it's against the 10 commandments of Bitcoin Twitter that thou shalt not trade. You will be lynched by the lynch mob. But you know what? Instead of selling at a certain place and then buying a fancy car, I'm selling when I believe it's a good idea to sell to rebuy it cheaper. People are going to have to deal with it. So I'm doing it mainly for those copiers on eToro because they have money at stake and because I love talking Bitcoin. And I love talking Bitcoin bull run. You already know that, Dr. Bull Run. So why don't you first introduce yourself a little bit, what you do, how you got into this, and also plug your newsletter that I signed up for recently as well.
Appreciate it. Yeah, sure. So I'm pretty much just a kid who really likes charts. I got into a lot of this on-chain stuff. I want to say it was in kind of like late December, early January. So relatively, recently. On-chain analysis is this new form of analyzing markets, that we don't have in traditional markets because everything isn't recorded on an open ledger that's publicly available to everybody, right? So what we're able to do is, through forensics or different heuristics, you can track movement of investor activity on the blockchain, right? And so not only do you have technical analysis to kind of analyze Bitcoin's price, but we also have basically, I like to think of it as like X-ray vision over the market, and you're able to look at what the different cohorts of people are doing, right? So what are big holders doing, small holders, what are, by age, we can look at what are older holders doing, what are newer market participants doing. We can look at what are miners doing, what does it look like coins coming in and out of exchanges, all these different kinds of things. We can look at, the spending behavior of where coins are coins going to, people that have a very low selling history and are in the market for the long term historically, or are they going to, a brand new market participant? We can look at all these things and then, draw some educated guesses, right? Stuff is of course just probabilities, but you can analyze these different flows to try to come to a conclusion. So that's what I do. Like probably, I'm so sorry.
Never call me puppy. I'm kidding.
I do have a weekly newsletter where I kind of summarize this stuff. Well, what transpired over the week, and then as well, kind of like keeping people in touch with what are kind of the broader trends and how are those evolving. So I do that weekly newsletter. It's completely free. It's sent out on my Substack, which is in my my Twitter bio, but as well it's sent out on Anthony Pompliano's Substack on every Friday. So if you're interested in that kind of thing, you can check that out. We also do a Saturday podcast. And so lately we've been doing different guests since we've been going sideways, for 2 months. So I figured, switch it up a little bit and use this as kind of like an opportunity to get different people in that I look up to in the space and I think people can benefit from. So we've had Checkmate, who's the guy who, he works at Glassnode and writes their weekly newsletter. And then also last week we had Willie Woo on, who I think is, he's the OG of the space, but I think he's also the most well-known analyst. So it was really cool to record with him last week. We did an awesome episode that's out on Pump's podcast and YouTube. And then this week we're having a guy named David Puel on, who worked with Willie at Adaptive Capital, which was the hedge fund that they worked at based on, like on on-chain metrics. So really bright guy. He's got a couple major metrics that are named after him. I know you remember the MVRV Z-score. He's the guy who created the MVRV. He's got the Puel multiple, some different.
Can you explain that? Can you explain that score?
Oh yeah, sure. So like these are the two metrics that I think he's really known for. The MVRV, which is a ratio of the market cap of Bitcoin to the realized cap. And so the way you can think of realized cap is it's a capitalization based off of when the coins moved last, right? So if I bought 100,000 Bitcoins for $1, right, that's adding $100,000 to realized cap. And if I don't move those coins, and if I haven't moved those coins to this day, then it's still only added $100,000, to realized cap. Whereas in market cap, right, you would be at, I don't have the price up on my screen, would it be whatever, over $3 billion in real value. So it's looking at kind of what the valuation of the market is in comparison to the rate of capital that's flown into the market. And so like, is that being justified or not? And then you can kind of get these overheated or underheated zones, and that can kind of give you good zones to buy in. The flow multiple is a little different. It's based on miners. So this is the issuance. So the daily amount of coins that are pumped out to miners, right, rewarded to miners in dollar terms. So what is that issuance in dollar terms? And then dividing that by the 365-day or the yearly moving average of that daily issuance in dollar terms. And so you can kind of get this gauge of, kind of, you can use it for overheated zones, but I think it's best used for finding buy opportunities when you have minor capitulation or, big drops off in hash like we had over the last month or whatever it was, month or 2 months. So that actually just flashed a buy signal anyway. But yeah, those are the two metrics that he's really known for. But I'm recording with him actually tomorrow morning, and that episode should be out in the afternoon, or it'll be released Sunday. And then the week after, we're getting the head of Glassnode, which is cool. Is a guy named Raphael, really nice guy. I'll have him on to kind of talk about more of the, rather than analyzing the data, kind of a perspective on what goes into the data, because I think a lot of people talk about the what are your thoughts on the data, right? Like, what do you make of it? And never really is a discussion around what is actually going into the data. What are the inputs actually going into it? So going to kind of have a conversation with him more geared towards that way of thinking about it. So stoked for that. But yeah, anyway, I'm rambling. But yeah, I do a weekly newsletter and podcast.
Yeah, it's you are a surprise guest, and it's great that people get to know you a little bit and understand all this value you have in the analysis of the bull run, which is really what we're here to talk about. A quick answer to John M. This is not who's asking in the chat, where's Puppy? This is not Toxic Happy Hour. Puppy is MIA. He's on holidays, so I am here talking the Bitcoin bull run with William Clement III. And so all of your content that you just mentioned can be found through your tweets, your Twitter account. Since you're a surprise guest, I didn't even have time, I didn't throw you into the description, because then the surprise would be ruined. So can you just quickly say where people can find your profile on Twitter? I guess if they search Will Clement, let me just
don't worry about all that. You can, if you're interested, like, you can look me up on Twitter, but you don't need to link stuff. It's all right. Let's just get into it.
Okay.
Don't worry.
However, I love your attitude. You're nice and humble about all of this. But on the screen right now, if people search on Twitter for Will Clement, they'll be able to find all that good stuff that you mentioned. So yeah, so my take, and I would like to share a graph here that it's an account that it's called Halving Tracker. So it's at Halving Tracker on Twitter that I follow, that is showing the previous bull runs and the current bull run as they evolve. And let me see if I can share that screen. Yeah, that's coming on in a second. I found it here. So I threw it on screen now, and I just want to explain to people that Bitcoin has had halving events 3 times previously. A halving event is when the fresh supply of Bitcoin that is rewarded to the miners is cut in half. When the fresh supply is cut in half, what happens, which is really, I think, economics 101, and most people who haven't studied economics will understand the dynamics of when the supply of something goes down, the price usually goes up. There's less available. So when these halvings have occurred every single time, actually all 3 times, then the price moves up. That's fairly sort of rational and logic. And if we look at this graph, then the purple line is after the very first halving that happened end of 2012. So you see there, it went very steep. It created a bull run and a parabolic curve. But then it took a big breather. There was a period of reaccumulation before it took off again on a second run. Now, I would say ignore the yellow line, because the yellow line is just an average of the first and the second. So that never actually transpired. That's just an average. Use it for what you want. The green one is after the summer halving of 16 that played out second half of 16, and in 2017 until the 17th of December, when it topped at around $19,606. So, and now we are, and this is where, you know, I want to hear your opinion. We are creating the blue line. The Bitcoin price is the blue line. I know they're not very, I wish these lines were a little bit thicker so they're easy to see, but that blue line is the price discovery, the price development since the halving 11th of May last year. We are now past 1 year. And so that started again a parabolic rise. We were around 9,000 when the halving happened May last year. It went all the way up to 65,000. It didn't really have a FOMO peak blow off top, yet we went in, you know, price went down from 65. It corrected more than 50%. Greg Sass, who's in the chat, know this because I want to bet with him, saying that it would do 50% sooner or later before end of 2022, and it did. And now we are at roughly 32,000. So, Will, this was just an introduction, an explanation of this graph. I don't know if you want me to keep it on screen before we potentially go look at some on-chain data that I know you have. You're a master of analyzing that. So yeah, please, your take on this.
Yeah, sure. So I think first of all, you know, comparing the different cycles is something that I had done for a while. But my framework, you know, even right before we dropped off, I had been starting to think this way, like really only a few sample sizes, right? So comparing exactly, you know, the structure or whatever price structure of each cycle, I don't think it's like fractaling that out. I think you'll see some similarities, but I think the market is so different even compared to 2017. So, and also, you know, the macro backdrop and the kind of players that are in the market, I think are just completely different. But in terms of the halving, so the way I see this is basically like you're sitting in a bathtub or some, you know, small pool of water, and you push, right? And you get that initial kind of rippling effect. And so it's kind of like this displacement, right? And you know, the way I think of it in Bitcoin is that it's this initial push of momentum, right? You know, even if demand stays the same, supply cuts in half, you're going to get this price jolt. And then that jolt or supply shock is then, you know, met by you know, just natural market psychology, people FOMOing in, trying to catch the momentum trade, and then it becomes a kind of like self-sustaining thing from there. But the halvings are what kind of gives it that initial momentum. But I think, for example, in 2013, part of the reason that bull run was so massive, right, was because the supply shock in proportion to other cycles was so much larger in comparison to the supply, right? Right now you have 900 BTC coming on the market a day. You know, before that, in the 2017 bull run, you had 1,800, and then before that, you know, it was 3,600. So over time, I think that halving has less of an effect in terms of the supply shock. But the way I see this is that over time, Bitcoin won't go around these cycles as much, in my opinion. around the halving. I think what happens is that the halvings originally were, whether this was Satoshi's intention or not, I think they kind of jumpstart that momentum of adoption for the network, right? You look at that kind of log curve, having that incentive of the price of Bitcoin going up because of the supply function, I think was a huge incentive to draw an adoption early on. And granted, we always, you and I are probably the same way. Like, I came into Bitcoin because the price went up. Okay, I don't care what anybody says about like all the humanitarian stuff. Like, that's awesome, and I believe in that 100%, right? But like, what had to draw me in first was the price appreciation. So I think, and then you go down the rabbit hole and figure out why Bitcoin's important. But that's what initially gets you in. So I think that played a huge role in the initial momentum of getting the adoption curve going. But now I think Bitcoin has kind of passed through the threshold of where the demand overtakes what the chart is going to look like more so than the supply halvings. Because right now, like, exchange fees are heavier sell pressure on the market than miners every day, right? So it's like, over time, that cut in half of new supply coming on the market is going to have less and less of an effect. And I think Bitcoin gets taken over by demand at that point. And then you'll still see these corrections, 40-50%, but I don't think that you see the exact form of this round bear market and then a blow off top bull. I think it becomes a little bit more free form than that, and isn't necessarily that same fractal that we're used to seeing moving into the future. But that's just the way I see it, and I could be completely wrong.
No. Don't sell yourself too short here. I think it's great analysis and a great input. I want to add to what you said about the halvings being less important, and it's so I enjoyed very much listening to your podcast with Pomp, where you had Willy Woo. I've been enjoying Willy's newsletter since beginning of this year, when I found the value of on-chain analysis, which you initially here said in the beginning when you came on, is giving us something that we don't have in any other markets, and that is an insight into who's holding, which types of people are holding, the sizes of them, and supply and exchanges, what is their behavior, and all of this. So it's really great insight, and that's why I think on-chain analysis actually has so much to offer. And a lot of people underestimate it because they're not used to having this type of information to understand what's going on in the market. So the thing I learned that you mentioned here was that where the supply of the miners used to be very important and basically was 100% the supply coming on the market, then the fees from exchanges, as you just mentioned, I just want to explain that to people, that they make when people trade, those fees, and they got to pay bills, and they sell some of that Bitcoin in order to pay their bills and, return profits to their investors. Those trading fees are now more than the mining reward, the fresh supply in the algorithm. So I think that's a really interesting thought, that the mining reward and thereby the halvings will be less influential in the future. I just do want to say this, and that is, I think the reason why I compare this to 13 is the halving in 13, the purple line, is I think it's interesting, and I think there is a logic around the fact that because blow off tops, again, you touched upon psychology and market psychology, and I think that's a huge factor in the price development and how it swings between bull and bear. And in 13, it was so steep that it created that blow off top. And again, now, unlike 16, 17, where it was less steep in 16, 17, and there was only one blow off top. There were not several. But this current bull run was steeper than 16, 17. And I think that's a good part of the explanation for why we had to, why there was whales that were taking profits, and we went into a reaccumulation phase that as we're in now. But back to your words on that, Will, or what is really interesting, I think, is what OnChain is telling us about what's happening right now, which you have described as reaccumulation, and why there's a diversification right now between what OnChain is telling us and the fact that price didn't start moving up yet. Whatever, take it away, whatever you'd like to throw in here.
Sure. So, I think first of all, before we talk into where we are now, we can kind of give like a brief rundown of what happened to get us where we are. So, throughout the early bull run, coins have been moving off exchanges in a big way, showing strong accumulation. After all-time highs, you saw a huge swath of new whales come on the blockchain, and of course their holdings increased as well in tandem with that. And then right around February, you started to see this decline in whales, and then kind of in mid April, you started seeing a decline increase in balance on exchanges, which are showing coins were starting to move on to exchanges to be sold. And so, the way I think about this is there were a lot of market participants that were shown as whales on the blockchain that were market neutral. So, perhaps they were, doing the grayscale arbitrage, or, capital flew in to do the cash and carry trade overseas. They have these huge spreads between spot and futures on some of these, less regulated exchanges, that had blown out to 30-40%. So a lot of capital came in there. And when you look at, some of the upticks in whales, you kind of see some coinciding amongst the two. And then also, I mentioned whales have been trending down since about mid-February. You see some of the big moves down, and that I think also coincide with the reduction of the basis between the spot and the future. So I think what happened, you basically have this big, capitulation of whales. Essentially, like, people have been blaming this on retail. Retail has been accumulating the whole time. Since we dropped down in May, retail has been stacking like harder than ever. So I think that's been a big misconception. Liquidations had a big part to do with it. We had a lot of leverage in the system, and that kind of accelerated the moves down. But overall, it looked like it was a lot of young whales that were selling. So up until, we had that big dump in late May, younger whales had begun to sell. But then after we had that big drop, what was interesting was that kept trending down, but the balance held by whales was going up. So what that was showing you is basically there's less whales, but their balance is going up. So supply is getting concentrated into older whales. And you can also see that by looking at the age of the coins that are being sold. That's, it's been younger and younger coins that have been sold. So you kind of have this consolidation of coins, moving into, older market participants, older whales. And then also since May, I've been tracking this metric called a liquid supply. And so the way you can think of this is, a liquid entities on the blockchain are entities that have very low spending behavior. So they take a lot of coins in, but they very rarely move any coins out, right? So they don't spend a lot of their coins. They're kind of the long-term investors, right? That kind of have these strong hands. And what you've seen since late May is this has slowly been grinding up. And so Glassnode has two ways to look at this. You can look at a liquid supply change, which is the 30-day change. So what's the difference between a liquid supply 30 days ago to now? So, that's a good way to look at it, but it's a little bit laggy. So what I presented to Willie was to take a ratio of illiquid supply and then take a ratio of that to liquid supply. And so what you have by doing that, by taking that ratio, is you have a real-time reactive measurement of that reabsorption from weak hands to strong hands. Essentially, that's what it's basically saying. And so this had been slowly grinding up, but over the last 2 weeks, I've seen a huge spike in that, which is showing that strong hands are adding pretty aggressively here, as well as a coinciding spike in the holdings of whales. They're up only I forget what the exact figure is. They're up 76,441 BTC over the last week. So whales are coming back.
Do you want to screen share? You want to screen share any of these things, Will? You're more than welcome. I remember you did that first time you came on Toxic Happy Hour, and we all love it, your graphs and analysis. And to people watching from eToro, I just want to say that, yes, I didn't tell you that Will was coming on here as a surprise guest and a guy that I call Dr. Bull Run. So this is a great analysis and insights into the bull run from reading the blockchain, which gives us information that other markets don't have. Okay, so let me know if wait, is it too early to put it on screen? We don't want to
no, go
something
for it.
You don't want to. It's
No,
good. We're good.
Yeah.
All right.
All right. Well, I guess we can start here. Actually, this is on TradingView. So what this is looking at is these are Bollinger Bands, and then there's a metric added over by a guy named John Wick. It's a pseudonym, but he's an options trader that I met on Twitter, and he gave me access to his premium indicator. It basically looks for volatility squeezes. So what you're looking for here is times when volatility gets compressed. You have very low, very little movement, right, in price, and it's just kind of consolidating sideways. That builds up, gets really tight, and then that pressure gets released. And so that's what that's showing. You can see we had three, well, we're coming into the third major squeeze. So first of all, we had one here in July, and you see how tight right here volatility got. It got super tight, and then you have this big implosion, right? You see it blow out, right? And that's the volatility squeeze. And so you had that squeeze that pushed us out. You had another one here and here, but this is but shown by the orange shading. This is the one that really gave us that initial momentum upwards. And then we had a second one here at the top. So after we topped out around 64, 65K, we entered another squeeze. It took about 2 to 3 weeks to play out. But we kind of had this fake out where we got up here, and then there's another metric to look at here. It's called the alpha. I'll pull it up. But you see, we had this big R. And so what this R mean? Yeah.
Quick question, Will. So these volatility squeezes you mentioned, it's basically when the price is trading like in a tight range for a period of time, and is that what you're defining it as?
Yeah, exactly. And I don't know what separates, and this is something you'd have to ask John, like why is this not shaded orange? I don't know.
Right.
I have to ask him because it's like part of its proprietary, the way he coded this or whatever, but I don't understand why this isn't shaded orange too. But granted, I think the fact that this is shaded orange just goes to show like we are going to get a significant move, because that doesn't happen often, right? And so the indicator's telling you that there's a big move coming. But this is what I've kind of been watching for. Here you had this fake break to the upside, and then you had this R, which is this is the second indicator that I had pulled up. Just to show you this here, you had this reversal. So it was a fake out, right, and then it broke back down. So I'm watching something very similar here to see possibly if we get what looks like a fake out to the downside potentially, and then if we got another one of those reversal candles. But it's still, nothing definite has happened. So until we break out of this lower bound, nothing is it's still up in the air. But we did retest the bottom of that band, and this is another kind of trend line I'm watching. It looks like we're kind of getting to the climax of this triangle as well. But, that perhaps I don't think that means nearly as much as this volatility squeeze. So I suspect the move is coming over the next couple days. But, granted, looking here, it could take up to 2 to 3 weeks. I just don't think that it's going to take that long. You can also look at volume. I mean, volume's been declining really, really steadily. And also, if you just look at, like Bitcoin's historical volatility, that's kind of in this like descending wedge pattern, which tends to break to the upside, meaning volatility is going to have a breakout. So all this stuff means that there's going to be a big move coming, right? But it doesn't tell you the directionality of, okay, is it going to break to the up or downside? I think that's what everybody really cares about. And so I think to kind of grok that, you have to look at the on-chain, and that could kind of give you a better idea of, are you seeing strong accumulation that perhaps is going to push us upwards or not? And so to look at that, we can look at several things. I'll just pull up the newsletter. Go ahead.
I want to ask you a little bit more about that because so since we're in the middle of a bull run, as Willy Woo says, fundamentals, the on-chain has never failed. And on-chain right now is saying that we're going to go higher. We're going to go significantly higher. And here's another indicator from John Wick, aka Zero Hedge. I actually didn't know it was. I was in your spaces a couple of days ago. I didn't know that was Zero Hedge. I mean, he's been around forever. It's a famous name. So what I'm saying is, we know from on-chain we're supposed to be much higher. Now there's an indicator saying there's going to be a pretty violent move. So nothing is 100% sure, but the probability of this moving violently higher is what is most likely. Is that the same way you see it, or?
Yeah, I think this is extremely accurate in terms of predicting these big moves, these shaded squeezes. I'm trying to pull back here to show you. Here's another one, right? After the 2019, we just squeezed down. Here's another one this is the squeeze that pushed us up in 2019 at the beginning of April on April Fools. Remember that pump? We had another volatility squeeze there. We had another one here. See, volatility got compressed, and then you had this big move, and this is that breakdown under 6K after 2017.
Oh. Yeah, that was COVID around 11th or 12th, maybe 12th of March. Bitcoin lost.
No. This is 2018. No. This is after the.
Sorry. Oh, I recognize that graph. Oh, yeah. Oh, that was that was a slap in the face for real.
Yeah, because everybody thought the 6K wasn't going to break, and then it broke through. But you could see how tight volatility really got in there. It got super tight, super condensed, and then you had a huge move. And so, each of these shaded regions, every single one, there's been a big move that's coincided.
Can I ask you something then? Because when I look at what you just showed from 18, and I remember those days, that volatility broke down, but on-chain told us we were in a bear market, right? Now, correct me if I'm wrong. I'm trying to give my ideas to why I don't expect that to happen. Now, even though if you look at the last month or two, it does look like it a bit, but because there we were after a blow up top, and the numbers of new users on Bitcoin were low right now, and that's one of the things we can see from on-chain is that we actually have record high numbers of new users coming on. There's so many things telling us that this is still a bull market. So if we have a low price and on-chain, if this volatility squeeze is showing us we're going to have a move, highly likely we're going to go up, in my opinion.
Can you see this PowerPoint?
Yes.
Okay,
yes.
So this is looking at what you just talked about. This is looking at entities net growth. And so there's been a lot of circulation of FUD about active addresses and how active addresses has been trending down. And where that's kind of flawed, and people are saying, oh, it's a bear market, active addresses are trending down. All that's showing to me is that we have less volume, right? And that's something that's coincides with the consolidation period. And so, every time a wallet makes a transaction, at least for me, I create a new address every time I do a transaction, right? And so by default, when you have lower volume, you're going to have lower, addresses. So I think this entities net growth is a much better way to visualize, how many users are coming on the network, because by definition, that's what it's showing. It's kind of using proprietary clustering and heuristics to combine different addresses and their behavior and saying, okay, that looks like one entity, or which can be a person, a corporate balance sheet. It's just one cluster of addresses that are behaving the same, right? And so what you see is in each of these stars, in each major top for Bitcoin, you've seen this big spike that coincides in the growth of new users, which is basically like this, euphoric FOMO spike, right? And then it pretty much drops off a cliff after that. And it takes a long time for it to bottom out and recover. What you're seeing now is the complete opposite. So if you look in the top right, you see that green arrow. You're seeing net user growth actually going up while price has been going down, and just continues to grind higher. And also to note, we haven't had that euphoric blow-off spike, right? So that's something I think is very interesting, unlike anything we've seen. If this was going to be the top, it's just completely fundamentally different, that you haven't seen this euphoric blow-off top in new users. So I think that's one of the biggest telltale signs, honestly, that we are still in a bull market.
Absolutely love it, and I very much believe to that. Let me know if you want me to unshare your screen. Otherwise,
I was gonna pull
this
up
is what
more
we're
stuff.
here for. Sorry?
I was just going to pull up some more stuff.
Yeah, please. This is it's such a treat. I told people I would talk about the bull run anatomy and why I expect a second leg up. So having you here as an expert, and I understand on-chain from when you and Willy Woo do your analysis and charts, but being able to have you here now is an honor and a great privilege. Imagine it's free watching this. I love it.
Thanks, man. I appreciate it. This is the next chart. So this is we looked at the volatility right here. We just looked at this, but this is what I was saying, another way to look at it. And this was that kind of downward wedge pattern that we've been forming, descending wedge pattern. You could see these trend lines that volatility is kind of been consolidating into. And I'm watching here to see if it perhaps makes another move back up and potentially breaks out of this channel. And you see a huge influx of volatility. So that's another thing I'm looking for.
That was a graph of volatility?
Yeah, that's the volatility.
That was not price. It was volatility. Got it.
Yeah, this is volatility. So up, like the green candles, all that means is there's a big move. So green candles could mean that there's a huge move to the downside. It just means you have a lot of volatility.
Right.
And I should probably actually change the colors of those candles because, people think up is always good, right? But in terms of volatility, not always. So here we have a couple different things. You have the transaction fees from exchanges. And this is what we were talking about. Exchanges are making money off of the amount of transactions that are done on their platform, obviously, and then they sell those onto the market. So you're seeing in general, though, a huge decrease in exchange fees, which is also showing, you have a decrease in volume, which anybody looking on any major exchange can see that volume's been declining for a while now. So it's basically an on-chain way of viewing that same idea. Also, you have look at the futures market here. You futures open interest, which has been kind of flat, but it's actually been trending. Let me see. It's up $600 million I put down since June 28th. So you can see it's got a little bit of an
just
upclimb.
$600 million. Just $600 million.
It's a little bit of an upclimb, but you have to realize we lost 15 billion on the way down.
Yeah.
So relative to that, it looks pretty flat overall. Still kind of down in the doldrums here. Also, futures, just the volume has been kind of trending sideways down. Just generally trending down. We've seen a little bit of a move up in the last week, but the overall trend is definitely sideways down. Next, this is the exchange flows. This is what we were talking about earlier. Throughout the major, the early part of the bull run, and exchange flows going down, and then in the middle of April, early May, you saw this huge spike of coins move back onto exchanges. Like tidal waves of coins were coming onto exchanges. I remember we had a couple daily records of inflows to exchanges. It was pretty crazy. So you had 144,000 BTC moved onto exchanges. Since then, since this peak, which is kind of marked by this dot here, exchanges are back down 44,883. So whatever you want to round that to 45,000 BTC since then, which is about 31% of that initial move. So, reaccumulation is apparent. This is a change in trend, in my opinion. Accumulation, distribution. Now we're watching this reaccumulation trend here, down 49,000 BTC. I'm sorry, 4,900 BTC this week alone. So yeah, that trend's been continuing. Really, you can see it kind of fell off a cliff in the last 2 weeks. So real strong accumulation in the last 2 weeks, which also coincides with what we had been talking about with whales. So that just goes to show you really strong accumulation over these last 2 weeks, guys. Next up, we have the liquid supply ratio. So this is what we talked about earlier. It's a more responsive version of the liquid supply change. So it's looking at the active movement of coins from weak hands or speculative market participants that are moving in and out all day, constantly moving their coins around, have really high spending behavior, and the movement of coins from those entities to liquid entities. And so you can see this had been grinding up, and this is that bullish divergence. But over the last 2 weeks, it had this huge spike, and then it's just continued to grind up. I mean, this is getting pretty crazy. We're approaching almost like pre-dump levels now. So in my opinion, this information here, this is, I think, the most important chart right now. This is the one chart, if I said, what would you use to describe what's going on right now? I would say this chart here. I think this information is not priced into the market yet. I think you're going to have a supply shock because you're seeing this crazy accumulation taking place while you have price diverging from that. So I suspect once this kind of reabsorption process is completed, you're going to see a big pop up in price because of all these factors of accumulation we talked about, but especially this. You're seeing this grow just even stronger by the day. Every night I check this, I'm thinking maybe it's going to drop off a little bit, but every day it's just pushing higher. So really, really strong accumulation over these past 2 weeks once again.
I love it. So
ahead,
if you just go back to that graph real quick. So you call it liquid supply ratio, but when it goes up, it means there's less liquid supply, right? You said it's the long-term addresses was what Willie Woo calls Rick Astley, never going to give you up, never going to send it back on the market. Or so when it goes up, it's not liquid supply going up, right?
Yeah, exactly. It should be technically called a liquid supply ratio because up means more supply is becoming a liquid. Willie Woo's Rick Astley chart is this same. It's the same chart basically, but it's a 30-day change. So what you're looking at is the change of you're looking at solely liquid or liquid supply, not comparing a ratio of them. And you're just saying, what's the 30-day change? There was 100,000 last month on this day, last month, 30 days ago. And now there's, 50,000, liquid coins. So the net change between those 30 days is negative 50,000. So I'll show you that chart. This is what everybody knows as the Rick Astley chart. Here we go. So
I was there when Rick Astley was hitting with that song, "Never Gonna Give You Up." I believe it was late '80s, or it was a good tune. It was very popular. It was not very popular to like it, but it was a happy tune to hit the dance floor on. Anyways,
yeah,
before your time, you probably never heard of it. Yeah. Have you heard the song? Have you actually heard?
Yeah, I've heard the song.
Okay. All right.
So this is the same chart, but it's just the 30-day change once again. So you can see same idea. You see this big spike and big move up, but this is looking at what's the net difference from June 14th to today, and so that net difference is 155,846. So it's the trailing net change between those two. Versus I prefer my indicator because it's more reactive. Right, I get a real-time view into the actual change that's going on every day when the data updates. So that's why I prefer this. I think it's more representative of what's going on. Although this is showing the same thing, really strong accumulation, but this is just more reactive. This is liveliness. So this is just another way to show accumulation. You see, it's not necessarily bearish or bullish in a broader sense because it's occurred here after the bear market, after the bear market, after the bear, And then also it's occurred here between the two double pumps, which I think kind of coincide with your thinking that we're in this range in comparison to 2013, because you're seeing that same phenomenon. And then also we saw this before the big bull run last year. So this wasn't necessarily a bear market. This was just kind of a sideways reaccumulation band before we moved back up. So there's been three times where it's been bearish, but there's also been two that it's been bullish. So I just think of it as, what is it representing from first principles? It's representing accumulation. And so the way you calculate this is it's the difference of coin days destroyed to the coin days created, which is just a fancy way of saying, if a coin is in a wallet for 1 day, it's created one coin day. If it's then sold, it then destroys that. So by definition, when this ratio is trending down, you have more coin days being created than coin days being destroyed. So that means that you're seeing accumulation, you're seeing strong holding behavior, right? And so you're seeing that here. So this is a really broader trend. This isn't something that's going to change, on an intraday basis. So that goes to show once again how strong this accumulation is here. But just keep in mind this has occurred when we moved into some bear market. So I just use this. All this is showing me necessarily isn't, are we in a bull or bear market? I'm just looking at what is the holding behavior right now, and this is once again showing accumulation backed up by those other things we looked at. Miner balance is going up, like this is accumulation too. Miners sold about 6,700 BTC at the beginning of the crackdown we had, and then since then they've added almost 3,300 Bitcoin. So all the FUD about miners are selling, you're seeing the complete opposite. They're doing nothing but buying.
Yeah, that was. We have it here, black on white, that was highly likely a little bit of a part of why the price went further down than it may otherwise have been, because the miners were banned in China, which in general is a very positive thing for Bitcoin, that it's more decentralized now going forward, the mining. And that forced them to sell some of that Bitcoin, and therefore causing maybe the price to go down somewhat, because they had to either liquidate their business or spend funds moving their thousands of miners to US and other places around the world.
Yeah, exactly. And, I think when you're in this kind of, low volume period, order books are, thinner than they were. Markets aren't as liquid as they were. So I think that selling pressure is a little bit more important versus, how we talked about in a raging bull market. 900 Bitcoins, the market can, absorb that like no problem, right? The regular pressure of miners, and they can, it can even absorb what I just pulled up, the 6,700 coins in even a day. But, when you have the market kind of environment that we're in right now, I think you do need to kind of pull the miner metric tool out of the tool bag and look at that a little bit more closely. But yeah, we've seen nothing but accumulation from them for the past couple of weeks now. So I think that's safe to say, that's kind of a change in trend that you've seen. And any miner capitulation that was going to, have taken place, those miners have already sold whatever they were going to sell. So, I see that.
Yeah, they're accumulating now. You just showed us that. They are accumulating again. Yeah. So I just want to add to the viewers or share. So I got Willy Woo's newsletter yesterday, just like I'm getting your newsletter, and I recommend everyone to check those out. That he wrote in his analysis, a large move is probable. I know this is very low tech, a boomer way of sharing information, but a large move is probable. Price action is setting up for a large, and a large squeeze, a significant move is expected soon, 17th to 24th of July, is what he's calling a high probability zone for a large price move up. Again, all analysis is probability. There's no guarantees, but I'm very, very bullish at this stage for Bitcoin. And this may be the last buying opportunity, in my opinion, of Bitcoin that is such a huge buying opportunity, where the price is so much below where it's gonna be maybe relatively soon. And I'm not saying that there can't be another like small wick down to up 20s. I just think it's way more probable that we're going to go up. So who cares if we hit 27 or 30 or 29 and a half? If we are confident we're going to the millions of dollars, get it over with and sleep at night instead of, stressing over day trading, in my opinion. What do you think?
Yeah, like the way I trade is I trade broader trends. So of course I have like the stack that I just hold, but I also try to identify like broader trends. And so, I see this as being a broader trend where we're going to break out to the upside. I think when we pop it, it's going to be a huge move. Like I just showed with the on Trading View, and I guess as Willie said as well. But I suspect when this thing starts to run, it's really going to run because that supply information I don't think is priced in yet. That supply shock. So I'm super bullish in the next couple of weeks. Especially the next week or two.
I think one thing that I'm really liking right now is the fact that we have this increasing diversion of what OnChain is telling us fundamentally, that supply is drying up. As I mentioned early on in the stream here, it's really basic economics. You don't need to study economics to understand if supply goes down, price will move up. Of any commodity, any goods or service, and we are seeing on chain that supply is drying up. You've just been showing us that the supply on exchanges is falling. E-liquid supply is going up, which means the supply that is not at all expected to come back on the market. So it's just such an amazing buy opportunity, in my opinion. And is that moon juice? Yeah, absolutely. But I'm an optimistic person in general, and I am very optimistic about the outlook here.
Yeah, I'm super bullish in the next 2 weeks for sure. I think this thing's getting ready to rip. I think once it starts moving to the upside, there's a lot of technical traders that are shorting this thing right now, and the fundamentals say the exact opposite. Price action says, price action looks like shit. Like it's not a secret that price action looks bad, but the fundamentals are so bullish. So I think you're going to see this big move to the upside, fueled by everybody who is looking at price action and all these technical traders saying, price is going to go down to sub 20K. Yeah, it's not going to happen. I think you're going to see a lot of people get squeezed out as you see that big pop upwards. So that's what I'm watching for.
Actually, I just want to, that's a really interesting point you bring up there with the squeezing out. I think there's a lot of people that don't understand what it means when we have a short squeeze, and also we can have a long squeeze when it's opposite. But as you said, and I heard also Tone Vace's interview of Willie Wu. I watched that YouTube podcast recently, that for the technical analysts that don't look at OnChain, but look at a graph that, the way that traders usually look at a graph with their technical analysis, that is telling them that that Bitcoin is going lower because they haven't seen a what they feel is a true capitulation. And Tone Vace was discussing this with Willie Wu, and that's why a lot of, I think, technical traders are shorting Bitcoin, which means they borrow Bitcoin that they sell on the market because they believe they can buy it back cheaper. Then what happens is, if the price moves up, they are forced to buy it back because they can't afford it to go further up. They're basically stopped out. So all of a sudden, the people that were very bearish and went short, which means they sold Bitcoin they didn't hold, when the price starts to move up, they're forced back in to buy it. And all of a sudden you have bullish momentum, and then you have all these people that before were bearish that were selling, and now they're forced to buy, and then you get that violent move up, and that's what I'm expecting as well. I think that's what you said you also expect, right? I just want to explain what a short squeeze or squeeze is.
Yeah, exactly. And at the top, everybody's overly bullish, and that leaves you more prone to move to the downside, and I think you're starting to see that, and vice versa. But what people don't realize is, like, when we had that move down to 28K, that was the largest day of net losses in Bitcoin's history. in dollar terms. Like that was the biggest capitulation event in terms of net losses in Bitcoin's history. And the market absorbed it really, really well. We only went down to 28K. So in my opinion, that was the bottom right there, is seeing this huge net realize of losses, and the market just absorbed it. We barely moved down below 30K. I thought, if you're going to see something like that, you're going to move down to the low 20s. We barely pushed through 29K, and you had the all-time record in one day of realized losses in Bitcoin's history. So that support down there is super strong. You can also see like the inflow of Bitcoins to whales. There's super strong accumulation down there at 31K. I just see that level as being, it's going to take something like huge outside force to push us below that if we do. But yeah, I agree with you. I think there's a lot of people going short here because they're watching price action, and I think they're going to get wrecked because fundamentals are saying the complete different thing. And that the divergence has just been growing stronger, right? So the way I think about that is the longer that the divergence doesn't translate to price action, the bigger the move is going to be. And so, yeah, like I've been wrong. Like people have been giving me shit on Twitter and stuff for the past 2-3 weeks. But, dude, whenever this thing finally pops, it's going to be insane the longer that this goes on. So, just keeping my eyes peeled and being patient for the next week or two.
Yeah, but once you grow and you have absolutely exploded in amount of followers, haters will appear. They come out the woodwork. They'll find something to dislike. You got to just push on and remember that you have 99.99% of the people who follow you who absolutely love what you do.
Thanks. Yeah, it's weird. You get 9 good comments, and the one bad one sticks out like a sore thumb compared to the other ones. And it's just like, getting used to just, not letting people get to you and stuff like that. It's the internet, It's Twitter, right? Everybody's portfolios are cut in half. Here I am, this 19-year-old kid acting like I know all this shit, and then people are like, who the hell is this kid? And then they make comments about all that, and it's like, I get it, but it's whatever. It's not like I'm not going to let it bother me and stuff, but people are going to say what they want to say. It is, it is what it is.
Yeah. No, you're not saying at all that you know what's going to happen. You're sharing free analysis of what you think you see, and so far you've been right many times, and no one is right 100% of the time. No one's saying 100% this is going to happen, but as Willie Woo says, it's about probabilities, and if you can have above 50% probability for what you expect, you can make money, and also you can just make money by buying and holding Bitcoin. In my opinion, it goes to 20 million in today's buying power. Actually, in 2019 buying power. Since then, we've diluted. So I absolutely expect $20 million per Bitcoin later this decade. So I want to touch on a thing you said early on about the mining reward being less important in terms of the halvings and the 4-year cycles. And we might already have seen some of that in 2019, where all of a sudden we had this pump to 13,800 and $80. And then it went back down, and this was outside the 4-year cycle thing. So I think what there might be a probability of is, and I think you were there when I think I asked you about that in Spaces as well. I think there's a probability that it's going to be more this swing between greed and fear that isn't necessarily only triggered by the halving, because the mining supply is less important than it used to be. There's all these other factors. So there's going to be macroeconomics, and there's going to be these swings potentially, like the exchanges having more Bitcoin in profit than is being mined. So the mining report should be less important. What do you think is the probability of that 4-year halving cycle being less important? I mean, you already touched upon it, but
yeah, I think over time, as the whole kind of macro environment grows, a bigger deal. people are looking more so for inflation hedges. I think that whole narrative kind of takes over. Whatever's going on with the supply. I think at some point it's just driven by the pure demand aspect. I think over time it just doesn't have as much of that effect and that shock to get the momentum going. I see. I think this is the last major cycle in my opinion, but we'll see.
Yeah, absolutely. Like if this plays out as a cycle, I believe as well it's the last. And I'm pretty sure that bear market will be after a potential blow off top, maybe after 300,000. What do we know? Bear markets are going to be shorter. In 18, it took 12 months from the peak of 20,000 to the bottom of 3,100. I don't think ever again it'll take 12 months. It's going to be shorter. It has been getting shorter, think about the S curve, right? Like when you get to that main part of the S curve, I mean, you're just going pretty much vertical. So I think we're getting to that S curve part of adoption. I think we were at the kind of the base of the S, and now we're climbing into that big elevator upwards. And so, I think you don't see these really long, prolonged bear markets. Not to say we don't have drawdowns or price consolidations like this, but I don't think we have any kind of multi-year prolonged bear markets from here on out. And to say I don't think that the moves upwards are as wild too. I think we kind of have this, free floating, generally up to the right trending, market. But I think like the whole trying to look at things in terms of cycles, is the cycle over, that won't be as valuable. I think it'll be more so is the price overheated or not? What is investor activity looking like? And those things will be more valuable. And then also there's a new kind of wave of on-chain analysis that I've really dived into. It's really not anything that's been public, so I'll show you some private stuff that I've created. But I've been playing around with breaking private on-chain analysis. I know you have to go soon, Will. So let's have a look at that. And I have a few things I want to share with you before you gotta go. Sure. Also questions. So let's take it away with your stuff here first. Breaking.
Sure. So this is just it's can you see it or is it?
I threw it up on screen. I don't know if.
Okay. Yeah. So this is looking at Bollinger Bands run over exchange balances, and so the way you can think of this is, if there's a huge amount of coins moved onto exchanges, then that's probably a good time to sell because people are presumably moving those coins on to be sold. Sometimes it's to post collateral, but mostly to sell coins. And so looking at when this metric breaks above the Bollinger Bands shows sell signals. And then conversely, if coins are moved off exchanges at a really strong rate, that means there's strong accumulation, right? Strong buying going on. And so that can provide you with buy signals when it breaks below the bottom of the Bollinger Band. And so you can see, green lines are buy signals, red lines are sell signals. You can see this provides pretty accurate signals as to buy and sell right before here, buy here, bought the dip here. It would have been nice to capture this a little more, but still you bought the dip, bought the move back up, bought the dip here, bought the dip here. This was a pretty good buy signal here. And then you start to get 4 sell signals in a row right before this big dump. And then, so for here, this little move up on the way down, I suspect this was sometimes it can have to do with people moving coins onto exchanges to post for collateral. So if you're already in a move down, you might see this send another sell signal because people are sending in collateral. So for here, although I'm not discrediting that this is a missed signal on part of the indicator, but I also think that's what caused partially this push up. Told you to sell here. And then also we just got a buy signal. So that, I was talking about the exchange flows. This is the first buy signal in 3 months that we've gotten. So, it's not something that happens often, but it's showing once again, really strong accumulation. Just flash that buy signal. So I think that's kind of the next wave of on-chain. You're going to start to have more technical indicators that are, thrown over on-chain metrics, so then you can kind of turn it into more of a quantitative thing where you can build algorithms with like 4 or 5 different metrics for certain parts of the market you want to look at, and you can kind of like filter through things that way.
So is this gonna be in your newsletter going forward? You say it's private.
Yeah, I'm gonna put some.
By the way, just blinked a huge buy signal, but yeah, you're gonna put it in there.
Yeah, I've longed my longs for sure, but yeah, so some of this stuff will be in the newsletter. Some of it I'm probably gonna keep to myself, but yeah, like that one I put in. I might have probably put in next week or something like that, but I like that one a lot. And there's also one with whales, very similar, like a RSI of whales. You could do this stuff with like long-term holders and like draw these signals. So cool stuff.
Okay.
I know you wanna say something. So
no, I mean it's mostly because I know you gotta go. You've been here for more than an hour. I really appreciate you coming on. I'm very happy that you did have the time. So I just wanted to remind everyone that it's still very, very early with Bitcoin. Like, don't think you missed the boat. Don't look at some altcoins that cost 5 cents and you think they're going to do the same as Bitcoin. They don't. Money monopolizes naturally. You can study Gresham's law. And a couple of notes on how early it is. There's about, I think it was 6,500 listed publicly traded companies, which means they're on the stock exchange in the world. And only one has gone fully a Bitcoin standard, which means all the liquid assets are in Bitcoin. I'm not talking about Tesla having bought a little bit of Square. I'm talking companies that have gone fully adapted Bitcoin standard as a better store of value on the balance sheet, and that's MicroStrategy. That's 1 out of 6,500. And there's one small country out of, I don't know, what is it, 190 countries in the world that has just legalized Bitcoin as tender. And it's not even implemented yet. That's how early it is. You didn't miss the boat. If you're watching this video live, while Will is sharing with us amazing buy signals, it's not financial advice, but it probably is not smart not to have an allocation to Bitcoin at this point. Second thing I want to say, as you were saying also, well, we're going into maybe soon, the steep part of the S-curve. And that's why also I personally still think that we can have, quite steep price moves up. And I just want to remind everyone that in the end of 2013, that halving bull run, at the end of 17, that halving bull run, Bitcoin did more than 10x in approximately 5.5 months, which means theoretically, just doing the same as before could still put Bitcoin at 300,000 by the end of the year or higher. And if Will and Willie Woo are correct about, potentially soon we start moving up, I would say that's very much on the table. I know people are turning bearish to some extent, but not Will, not I, not Willie Woo, and not a lot of other people who actually educate themselves for this. Lastly, I know you got to go. I have a question for you. So, Will, can we still get you on as a monthly Untoxic happy hour and get the Dr. Bull Run input? You think we can still do that?
For sure. If you hit me up, I'll come on.
Awesome. So we'll try and get Poppy's timing to work with yours and mine, and then do something in August, since now you've been on here. And thank you so much for coming on. Guys, you can find William on, guys and girls, you can find William on @WillClemente. Just search for his name, also on Twitter. That's a great gateway to all the different content and analysis that he's producing. Thank you, William.
Sure, no problem. Like I said, just hit me up. I'll come on Toxic Happy Hour. Thanks everybody for tuning in. This was fun. Love chopping it up about the on-chain stuff.
Excellent. All right, but you know what? I think people got so much great information here that I have nothing further to add. So we're gonna call this the end. I'll try and do another. Oh wait, no, Q&A. You know what? I'm gonna hang around if there's Q&A, Will. But thank you so much for from coming on and being my my surprise guest. I really appreciate it.
Is there a Q&A for me?
Oh no. Well, when I
can hang on for like 5 minutes if you get.
Yeah, okay. So I posted on eToro that I was going to do a Bitcoin bull run anatomy and do some Q&A, because often people have a lot of questions. The chat has been hilarious. It's rated R, so don't go there if you're not ready for that. It's pretty funny. But I've been trying to focus and not participate in the chat. I'm trying to focus because it's some pretty heavy information, high signal to noise ratio from Will. So I haven't paid so much attention. But you know what? I don't really see any questions now. We may just have, you may have already let anyone or everyone feel that, don't worry about it. We're going way higher. And the questions and lack of confidence might have gone. I actually don't see any questions right now. I just see Peter Scott Morgan 1 saying, I want that indicator. That was a private one. Sign up for Will's newsletter. It might get in there next week. So any questions? We're still live. If anyone has any questions, then feel free to shoot. So we have one here. That may be, when did Will start doing TA and what got him into it? I think this is a little bit different on chain, but I guess it's still, I'll let you answer that, Will. If you, for whatever you have time, you know?
Yeah, I think TA is valuable. I think it's like another tool to use, right? I got into TA before OnChain, just like very vague, just drawing like trend lines, very, just basic stuff like that. I got into that probably at the end of last year, but then started doing it heavily after we had that move down at 60K, because I think there's a lot of stuff that if you had looked at TA, that could have given you some hints that we're getting ready to move down. OnChain. Okay, I got into OnChain at the end of December. Actually listened to a podcast with Willy Woo. I was like, oh, this shit is so cool. And so I just started like looking. I watched every video. Like, I sound creepy or whatever, but I've listened to every single video of Willy Woo, every podcast he's ever done, every podcast that David Poile's ever done. Just trying to like follow the really smart people in space and like soak up everything for them. So how high the bull run will go? I think six figures is not crazy, but I still think we can get up to like 200. I don't think that's out of the question. I think once you start to get momentum back to the upside, I think people are underestimating the full-fledged force of a bull market. How fast God, I'm stuttering really bad. The momentum can go once we start kicking back up. So, yeah, I'm watching for six figures for sure.
Nice. And so am I. And looking at the previous halving bull runs, I'm expecting 300 minimum, I must say. And I'm not saying you can't go to 5, but, as we get near the 300, I think we are getting near the top probably. All right, I don't see any more a question. Well, once again, thanks a lot, man. I will end the stream. Everyone, thank you for tuning in. I guess everyone got their questions answered because there are no more in the chat. So yeah, well, thank you very much, and looking forward to do a toxic happy hour where we're a little bit more maybe informal and loose, and we have fun with Puppy, who right now is on holiday.
Yeah, so, sure.
Thank you.
Say hi to Puppy for me, and you guys just let me know, and I'll come on. So thanks again.
Awesome, man. Love it. Okay, thanks a lot, and have a good one, everyone. I will end the stream here.